Hi, Kelly Eckholt here to update you with the key events of the week. So this week has been dominated by the ongoing market reaction to last week's less dovish than expected Reserve Bank commentary. We've seen another significant increase in wholesale interest rates over the course of the last week, which has only just been pared back in the last day or two. What we can see is that long-term wholesale interest rates have risen by between 15 and 30 basis points, depending on the maturity, compared to before the Reserve Bank monetary policy statement. And it's those longer-term wholesale rates that are rising by more than the shorter rates. This is all coming about because the markets are re-evaluating the risks around the outlook for the OCR going forward. And in particular, markets now discount the chances that there'll be another OCR cut in this cycle, and that does seem to be in line with the Reserve Bank's message that there's quite a high hurdle for another OCR cut looking forward. But at the same time, the markets are also re-evaluating when interest rates might start rising. And in that regard, market pricing has got to the point where it's now in agreement with our forecast that the first rate rise will come at the end of 2026. And that's in comparison to the Reserve Bank's own forecast, where that's going to occur closer to the middle of 2027. In addition, markets are also flirting with the idea that the rate rises might start even sooner than this. Now, in this regard, probably markets are getting a little bit ahead of themselves, but that's what markets do. But it's important to recognise that with these rising wholesale interest rates, there are increasing pressures, particularly on longer-term fixed mortgage rates. That's probably not what the Reserve Bank intended when they were issuing their monetary policy statement last week. I'll be back to update you again next week.